please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
A very good morning. Welcome to Chartbusters. Well, this is the show where we'll highlight all the buzzing stocks. It's a good start actually to the Friday's trading session. I'm Nigel D'Souza, and with me is Reema Tendulkar. Hey Reema, things looking pretty good. Yesterday we had a good rally, and in fact today we have followed that up as well. I was looking at a couple of technical levels, and the Nifty is trading above most of those technical levels. So we were looking at around the 10,538 odd mark. That's the Nifty bank. Yesterday we conquered all these levels by the time we closed, and today as well we're holding with some gains. The Nifty bank as well, and in fact the Nifty has conquered the 100 DMA. So that will be a positive sign. We'll be looking at a close above those levels. And also, Reema, the 10,500 put, the addition over there is close to around 13 lakh shares the last time I checked. So there is a sense that now the bulls believe at least they can defend the 10,450 odd mark. The premium at the start of today was 55 rupees. Currently, it's come down to around 30 rupees. And the addition now is nearly 15 lakh shares. Keep an eye out there.
Yes, absolutely. Extending gains from yesterday. And look at the mid-cap index. It's been a one-way up move since the start of the trading session, now higher by close to about 1%. The advanced decline ratio is holding steady. Currently, we've got two stocks in the green for one stock currently in the reds. Looks like a good end to the trading week, at least up until now. But let's take a look at the stocks which are making headlines this hour. MCX gains today after reports suggest they are in merger talks with NSE and that they could submit a proposal to SEBI this month.
And United Spirits and United Breweries, they trade in the green after posting relatively stronger numbers. The USL management guides for double-digit top-line growth.
Cummins slips on the back of weak numbers. Domestic performance disappoints while revenues from exports jumps 30% on a year-on-year basis.
And Kochi Shipyard gains as the management tells CNBC TV18 that the order book for the next 2 to around 3 years is at around 14 to around 15,000 crores. While Granules continues to see selling pressure, the management says that raw material costs have gone up. Prices and shortages adds that FY19 growth will be similar to FY18.
In key earnings today, a decline in the U.S. business will impact Sun Pharma's earnings. Management commentary on Halol will be the key to watch. From the banking space, expect the asset quality to deteriorate for Bank of Baroda, while for Tech Mahindra, a CNBC TV18 poll pegs the dollar revenue growth at 2.5%.
All right, then, the market's virtually at the high point of the day. We are holding at around the 10,560 odd mark. So from yesterday's close, in fact, we have seen a big rally. We have IFCI that's buzzing around. They received close to around 280 crores from the Bhushan Steel resolution. So good news out there. And that stock has moved up. Remember, it's been a rank underperformer, but for the time being, at least, it's seeing a bit of a bounce as we speak. And the Nifty itself has moved to the high point of the day. So keep an eye out on a couple of those stocks. But let's get Ashwani Gujral. Let's find out whether or not you've missed the bus or you can take a fresh long position at these levels. Hi, Ashwani. Putting together yesterday and today's rally, well, we've gained nearly around 120, 130 points odd. What would be the trade on the Nifty? Would you be looking to buy on a bit of a dip, or do you think the bulls have run their course?
See, in the market, if one bus leaves, another bus is always coming. So, Nifty, Bank Nifty, it's going to be kind of choppy, although there is lots of short covering that's still happening. But today is a bit more sideways than yesterday. For me personally, we're kind of a little overextended. It would have been better if you could get some sort of, decline so that you have, some kind of a decent stop. From here, the problem is you suddenly have a 150 point fall and nothing has changed. But the intraday trader has been kicked out. So that way, I think more individual stock day. Consumption is making a very strong comeback. So everything from Nestle to Bata to Titan, everything is moving back up. Even Voltas is going back up. So all kinds of consumption is up. So Titan right now is a buy with a stop of 920, target of 956. It's a fresh move, didn't move yesterday or day before. Dabur is a buy with a stop of 372, target of 388. And Tata Steel is a buy with a stop of 558, target of 580.
All right, Ashwani, thank you very much for that. We'll get chatting with you later on in the day. Let's straight away then head to the companies lined up on the show. Mukta Arts has reported a weak set of earnings this quarter. In fact, there is a loss of 88 lakhs in the quarter gone by. To discuss this and more, Rahul Puri, the MD of Mukta Arts, joins us on the phone line. Hi, Rahul. Good morning. First, if you could give us your outlook on the two key segments that the company operates in. One, which is in the film exhibition business, where you have various multiplexes spread across Western India. And secondly, in the film education business, which is your Whistling Woods, business. Tell us the outlook on these two for FY19.
The outlook is extremely positive, I think, on both those areas. If you look at the education business, Whistling Woods, we're looking at increasing the headcount at the school from 950, what it stands at the moment, to about 1,100 by July. This will allow us to increase earnings as well as EBITDA in that business. That business is already profitable. 2018 was a good year for it. It reported its second PBT profit, and we expect that to continue in the years to come. As for Mukta A2 Cinemas, the exhibition business, it's been a challenging year. I think 2018 was a tough year content-wise, but there again you can see that the business is up compared to divisional revenue because it wasn't a separate subsidiary last year, but that's also up about 25%. Our footfalls are up about 9% over the year. And, the 2019 financial year has started very, very well. Q1 of that year is looking extremely positive with the lineup of films.
All right, Rahul, let's get some numbers going then. The current screens that you have, you expect on adding a few screens. I remember you telling us your ultimate target is around 100 screens. So can we see some addition in this year? And you said the footfalls have gone up by 9%. I think it's coming at around 40 lakh. For this year, what kind of a number are you looking at?
So we're looking at, if you look on a sort of like-for-like basis, I would expect footfalls to increase again by about 8% over the year. But we will be adding further screens. We're opening up Sun City in Mumbai in June. We will open up Karimnagar just outside Hyderabad, probably also at the end of June. We've got cinemas lined up then in Chennai, in Ahmedabad.
So how many screens, Rahul, how many screens in total do you have now? How many are you looking to add in this year?
This year, you'll probably see an addition of anywhere between 15 and 20 screens. 15
to 20 screens. So this takes the total number of screens to?
That should take the total number of screens to just under 80.
Okay. Under 80. Okay. What was the ad revenue and the food and beverage revenue in FY18 and the outlook for that in FY19? Because you are operating at lower metrics when I compare it with other peers in the film exhibition business like PVR Inox.
Yeah, so typically our F&B would be about 25% of our top line, and our ad revenue, which is the one that is the metrics that we're trying to get up to what I think is industry level. Our ad revenue was about 1.23 crores in FY 2018, but we are very close to looking to more than doubling that revenue in the next financial year.
Rahul, you said that your total number of screens are going to increase by nearly around 30%, right? From 60 to around 80. So in terms of revenues, what would that translate to? You told us footfalls on a like-to-like basis will go up by around 8%. So total revenues you're targeting for this year from your cinema business?
I think, some of those screens will be in our Mukta Asian joint venture, which is a joint venture we have for single screens in Andhra Pradesh predominantly. But I'd expect that our top-line revenue would continue to grow. It grew about 25% like-for-like last year, and I'd expect it to go up by another sort of 20% this year.
Okay, let me come back to the film exhibition business. You're saying Q1 has started on a good note. You're optimistic about FY19. Does that mean it will be operationally positive in FY19? Because FY18, you reported a loss for the exhibition business.
Yeah, the exhibition business operationally, so I mean, on a cash basis, the company is profitable. I think after depreciation, the company falls into losses. I would expect that we'd be very close to turning that around in the next year. And given a solid flow of films plus an increase in ad revenue from our deals, as well as the addition of several key theaters in strategically important cities, I'd say that we'd be very close to being break-even by the end of FY19.
So, Rahul, let's keep it very simple. For FY19, all your investors, our viewers, they've been waiting for you all to turn profitable. FY19 is the year that you deliver a net profit by the guidance that you've given us?
Yes.
Okay, all right. Thanks so much, Rahul, for stopping by and, in fact, giving us all those details. Let's see whether or not, the stock, remember, at one point of time was at around 80 rupees. It went running away to more than 100, 120 rupees. But from the top, it's seen a sharp correction. Now management sounding reasonably confident for FY19. So we'll keep an eye out on the number of screens that they're adding, the positive outlook as well they're talking about in terms of their education business.
Let's turn our attention. Okay, before that, Cox & Kings arm has got an NBFC license from the Reserve Bank of India. The intraday chart of Cox & Kings will be up for you on your screen. It's reacting positively to this particular development. Now it's a gain of close to about 6%, climbing higher as we speak. 6.5% rally now on Cox & Kings as its arm has got a NBFC license from the Reserve Bank of India. We'll try and touch base with the company to get in some more color on this and what it means for the financials of Cox & Kings. I guess there will be some benefit in terms of synergies as well with Cox & Kings, considering they are in the financial travel industry. They, provide, the money transactions, etc. So I guess there will be some synergies as well, which Cox & Kings can get out. But let's turn our attention to 20 Microns. This is not a company we usually talk about. This company is India's largest manufacturer of microionized minerals, which primarily has applications in paint, paper, rubber and the plastic industry. But it largely depends on the paint industry for a bulk of its business. In fact, all the large names in the paint industry work in close association with the company for sourcing their raw materials. The managing director of 20 Microns, that's Atul Parekh, joins us on the phone line to talk about the company's quarterly performance. Thank you very much for joining in. If I look at your performance on a year-on-year basis, on the top line, there's just a very marginal growth that we've seen. Your revenues for FY18 are at 388 crores versus 371 crore that you had in the prior year. What's the outlook looking on FY19 in terms of revenues, as well as can there be a further improvement in margins?
Yeah, so what the company currently is planning is not focusing too much on the top line because there is a lot of opportunities out there. But what our company is doing is we are focusing more on the specialty part of the product line rather than the commodity segment. So if you look at it, the margins have been improving at the bottom. And also we expect that we would be focusing more on improving the bottom line with the same numbers in FY19 as well.
Okay, all right. So you're saying that these margins that you're delivering of around 13.5%, you're going to hold on to those levels?
It will improve as well.
It'll improve to what levels? By 50 basis points, 100 basis points? What will
mostly, but it could be anywhere in that particular range.
Of around 50 to around 100 basis points. So 14% is the margin that we could work with?
Yes.
All right. Mr. Parekh, so the top line, we're going to see a single-digit growth at least?
No, you will see a double-digit growth, but it will not be an exceptional growth because we're looking at focusing more on the value rather than the volumes.
Okay, all right.
All right. One concern with the company is the debt on its books. Your interest cost is eating into the profitability as well.
Right.
What is the plan with respect to that? Any guidance?
Yeah, so we have been focusing on that as well. So we are working with our current bankers and our rating agencies as well. So we hope that with these results, the rating will improve as well, with going up by 2 notches at least. And that would substantially bring down the interest rate and would help us also. And we are also repaying the debt through our internal accruals as well. So that is also...
So some numbers, the absolute debt, and how much are you looking to repay in FY19?
We haven't thought of a figure of repaying exact amount, but it's an ongoing basis. But we have about 65 crores worth of long-term debt with the banks as of now. And we hope that the rate of interest would go down, which will help us in repaying.
What are you currently borrowing at if you're expecting it to go down?
Yeah, so it's currently anywhere in the range of 12.5%. So there is substantial margins available for us to go down with the market rates, current market rates.
But including working capital, what is your debt?
Yeah, with the working capital, we have about 130 crores worth of
130
debt.
crores of debt. All right.
Okay, you said you're focusing on specialty microions, right?
Right.
Will that entail a capex? If yes, how much? And will that further add to the debt?
No, we have been focusing. We have a sufficient capacities for the specialty minerals. We would add on a little bit of capex in the next 2 to 3 years, and we already have a plan in place for that capex. But it is not a substantial capex. It is going to be more on increasing the capacities on a minimal level. We have to meet the market demand, being our internal accruals, because we don't need any external debt.
Right. You could tell us, paint contributes the most, right? You're at 50-55%?
Yes, it's about 55%.
55%. Yeah. Okay. And from the paint industry, who is your largest customer? If you could give those details to us.
Yeah, Berger Paints is one of our largest customers, followed by Kansai Nerolac Paints. Okay. And then we have Asian Paints and Akzo Nobel. So we cater to all the top 4 customers of India.
Okay. Atul, do you guys have a 3-year or a 5-year plan where you see 20 microns in terms of revenues as well as margins and in strategy?
Yes. So as in terms of the strategy that I mentioned, we are focusing more on the specialty chemicals, where we are replacing a lot of imported products which are coming into the market, and they don't have enough Indian manufacturers in India. We are focusing more on innovation. Our company is very well known for R&D, so we continuously innovate a lot of new products every year in the market for all the industries that we cater. And in terms of the growth plans, yes, definitely we look at almost 30 to 40% growth in the next 3 to 4 years. Okay. As well as in the bottom line as well. So we have aggressive plans coming up. We are also getting into the retail sector. So we are coming into the construction chemicals, waterproofing additives space. And we are also coming into mineral-based fertilizers, which is a new concept in India. Okay. So these two are very, very important growth parameters for the company.
Interesting. How has been the response to your herbal division and the construction business?
The response has been very good. We are currently concentrating on the tier 2, tier 3 cities. Okay. And the response has been really good. So now we are trying to establish a distribution channel, which would take us to the next level.
Atul, you're sounding confident. Your stock has recovered from the low point of the day. Yesterday as well, we did see a big rally on the stock because your Q4 numbers look quite good. So intraday, there's a bit of a recovery. The simple question is, if you're so confident about your business, why is the promoter stake coming down? And also, I was looking at your last release. There are quite a bit of the promoter holding is pledged. So will the promoter sell more after being so confident? And what about the pledge? Where is this pledged?
Right. So the promoters are not going to be, selling anymore. Now all the reclassification of the promoter group has already been taken place. So now it is only we have the promoters from the family part of the rally, and for sure there has been no increase. So we are looking at increasing the shareholding of the promoters in the future, and that would eventually happen in the next 1 to 2 years. So you'll see good promoter holding in that phase.
Okay, so how much do the promoters want to increase their stake? Will it be a preferential issue which will pump money back into the company?
Yes, we are still working on different patterns of how to increase that shareholding. So once we get to know about that, we'll let you know. Yeah.
All right. Thank you very much for that. That's 20 microns feeds into the paint industry. So quite a proxy for the demand improvement, if at all, comes in the paint industries. It should benefit 20 microns as well. The stock is recovering from the low point of the day as the company tells CNBC TV18 they want to focus on improving their margins and are looking to bring the debt down on the companies.
Then the markets have moved to the high point of the day. So pretty good news then. We have Bajaj Finance, Bajaj Finserv. Both of them have moved higher in the last few minutes. So just keep an eye out on both of them. Remember, they came out with a rather good set of numbers. Even Finserv should come up for you. That's making fresh all-time highs, as Abhishek was just telling us in the break. And Maharashtra Scooters as well has a stake in Bajaj Finance. So keep an eye out on that stock as well. There is a bit of a holding play that plays out there. Sun Pharma as well is doing well. Remember, it comes out with a set of numbers. But talking about numbers that we're expecting today, Abhishek's with us in the studio. Abhishek, Bank of Baroda, that's the big number you're tracking today. What do we expect there?
Well, Nigel, all focus will be on the asset quality. Slippages are expected to remain elevated due to the fact of RBI circular. So analysts on street like Phillip Capital are working with a slippage number of as high as 9,000 crore, which compares to about 5,600 crore in the previous quarter. So asset quality is expected to deteriorate on account of higher slippages. Gross NPA in the previous quarter was at 11.3%. So what drives the slippages are the provisions. So provisions are expected to remain elevated, and not only on account of higher slippages but also aging of NPAs and due to mark-to-market treasury loss. If the slippages come in from the known stress assets of 29,000 crore, which has, the restructured account 5/25, SGR, S4A, etc., then it will be positive. But if the slippages come outside these known stressed account, then it will be negative. On the positive side, loan growth momentum on the domestic book has been pretty strong in the previous quarter. So if that continues at 15-16% YOY, that could lead to net interest margin being sustained at healthy levels of 2.6 to 2.7%. Our polls suggest an NII growth of close to 24%, while the bank could report a net loss for the first time in 8 quarters at 122 crores. Back to you.
Okay. Thank you very much, Abhishek, for that. By the way, keep your eye on Just Dial. Stock has been moving well ever since it came out with its numbers. Since the day of its numbers, Just Dial has seen close to about a 20% rally, and even today it's higher by nearly about 4%. On the whole, still steady, a day of steady gains so far, so up 0.5% on the Nifty and the Sensex, mid-cap up 1%.